Our core product is basically the company is a technology company operating in both the banking and regulatory technology spaces, as well as being a regulated electronic money institution involved in providing transactional banking services and treasury services primarily to business customers in the AML regulated sector. Yes, absolutely. Where we differentiate our services is that ISX Financial is actually connected, for example, to the Central Bank of Lithuania, and we offer SEPA Instant, SEPA Direct Debit, and SEPA SCT transactions. We're also connected via Pay UK into the Faster Payment Services Network, the BACS network, and the CHAPS network in the UK. And we also offer SWIFT international transactions through our correspondent banking network. We support over, I think, 40 currencies in terms of remittance, as well as offer bank accounts, or I should say international bank account format accounts under our own bank institution code in the European Union. And we also offer sort code based accounts in the UK for our customers. So we're a primary issuer of accounts, as well as we effectively move money on behalf of our customers using a variety of networks. In terms of the card schemes, we're also a principal member. We offer card acquiring, much like the Addians and Stripes, but we also are a card issuer, and we have started a rollout of a Diners Discover card that supports our business customers acting as program managers, whereby we can roll those cards out co-branded with our partners to support their ultimate retail customers as well. Well, primarily the difference between bank tech is that bank tech and fintech, I should say, bank tech is focused on banking technologies such as payment processing, connection through to central banks, such as our connection to the Bank of Lithuania, and also our technical aggregation connection to Pay UK through to the Bank of England. Bank tech, again, and as a bank tech provider, we focus on core banking systems, that is the transactional systems, the journaling systems that provide the basis of issuing accounts and managing accounts, for various customers. And of course, bank tech also then looks at transactional banking methods that include cross-border transactions through partners such as SWIFT. Fintech, on the other side, is probably more concerned with securities, different types of technologies that sit atop bank tech. It may also be more concerned with a specific slice, for example, of bank tech, for example, international remittance, and it's a bit of a narrower field in terms of what it actually does in the grander scheme of banking technology. Well, as I said previously, ISX focuses on effectively moving money, whether that's through domestic networks such as SEPA or FPS, or through international networks such as SWIFT, or through remittance corridors with our various partners. Now, what's changed in the last year or so as we've come out of the zero interest rate policy area is that we're seeing the banks starting to become profitable again, whereas they've been through several years of either low or unprofitability. ISX has been profitable since 2019 continuously because we focus not on the zero interest rate and looking to make money from lending or through interest rate or yielding products. We actually offer services along the treasury and, I suppose, moving money aspect that have value to our customers outside of the pure deposit for interest-bearing accounts that banks offer. So what we're seeing at the moment is that we now have additional revenue streams that are coming online that we expect will enhance our profitability, and they complement our payment networks and our ability to move money, rather than being pretty much the sole basis of profitability, which is the case with traditional banks and their methods of operation. Thanks, Saber. I think I answered that question just previously, but again, the zero interest rate policy environment actually adds to our ability to complement our existing payment products. Now, in terms of where we focus those products, we tend to focus those products on AML regulated sector businesses because those businesses have the most difficulty in terms of actually servicing their treasury needs and their payment needs to move money either internationally or domestically. So we see that all of the moves towards digitalization and new competitors in the area and so on and so forth actually doesn't really affect our primary business because most of those are focused on the retail sector, whereas ISX is very much focused on commercial and businesses which primarily we see are underserved either in the UK or the European Union. The company intends to list either late in 2024 or early 2025. We have already commenced the listing process by starting our prospectus. We've commenced discussions with various national regulators, and we are seeing that when we look at the process, unlike most that would seek to IPO, we are most likely to go for a direct entry, given that we already have a large number of shareholders, we're profitable, and we don't seek to basically raise capital because we don't at this stage need it. However, we do recognise that down the track, having access to capital markets will be beneficial. We also notice that we're a high growth company and that we are very investable going forward. Our results that are due to be published in an unaudited form in the next few weeks, at the end of January, mid-February, demonstrate a high growth company that will be very, very attractive to customers when it's listed on a regulated market.